Check it out. Yeah, check it out. It should be live now. Sorry about that. Apologize, man.
It's there, Josh. Thanks. Good luck today.
Yeah, thanks, man. You too. Apple got some weakness right here. Google going up, Apple going down. Microsoft going up. So they're DJing right now here between these three. Neo testing the support. Look at this compression. You see this? Literally like green, green, red, green, red, green. Nobody can make any money out here. Right? Exactly. That's the things. So they don't want to go south. They don't want to go north. They want to go north, south, but strong support out here. Okay. Creating a melodrama right there. Sorry, apologize, guys, on YouTube. Sorry, I don't know what happened, but the internet is live. I did not have any issues on internet, Discord, all the services, everything is fine. I think the YouTube server, because we have only a few people out here going live. Oh, VIX pop. Look at them. But market maker, they controlling. Look at Google. They're controlling via Google, using Google. But Apple going down, everything is going taking toll. Not everything. Weakness coming in, guys. Look at that weakness. But market maker, they are controlling. Man, solid weakness. But the price of control line, they're using Google. Look at that. Took the Google HOD. Yep, price of control line breaking down. Wow, the puts are so expensive today, huh? Wow, they set up a big trap, dirty trap out here, guys. Watch, be careful. Making money dangerous. No wonder. They jack up everything. Look at the waterfall. I'm not gonna trade SPY then. No wonder. Man, this is ugly game they're playing with people, man. Watch out, man. Dirty game. I'm telling you. It's a dirty game. Dirty game. Man, I love to play, but this is insanity. VIX is popping. Support is here. I'll be right back. Man, this is unfair, huh? These people, they jack up the premium crazy. So even the candle moves very difficult. GS very weak today. Let me look. They are compressing right here. Yeah, it's a weak right here. GS got a resistance right here. When GS breaks, we could go lower, but going lower is not a good. Yeah. Nice. GS is good. Shorting. They had the earning, right? 26 cents. Right. That's why they want to take it down. GS. Let's see. ZS. Let me see. Z scalars. Option activity. Let me tell you what I can see, man. They always beat the earning, right? Oh, they jack up the price big time. $99, 200. Wow. Forget about it. How much money you can make, I'll tell you right now. Okay. So $2, right? You need $4 plus $8. $12 Z scalar goes $12 down. $12 down in a pre-market. Morning opens up. You're not gonna gain anything. $12 down because you have theta decay almost $1.85 plus your premium jacked up to $8.40. IV implied volatility is they jacked up to 200%. They can bring easily 100% down. So from $8.40 premium to $4. So $4. Yep, absolutely. So $12, nothing gonna gain until $12 goes down. So $12 means 10% Z scalar goes down tomorrow, no benefit. And if the Z scalar goes up, then pointless. Then put gonna lose everybody. And if the Z scalar goes down, all the call will be lost. So both the party will lose money. Bulls and bear. I'm not trading, guys, okay, right now. I'm telling you, man, this is dirty games going on right now. I don't want to participate. Look at that, man. Man, things are going, but Apple. Coin is going, okay. Coin is going. Coin looking super weak. Market looking super weak, but I'm not trading. Ugly duggly game going on. Yep. VIX is popping. Nice. Yep, all support here, right there. Man, coin looking super horrible. Oh, 63. Beautiful. Look at that. SPY is going. Just a second, okay? I'm trying to do something. 41, 57, low 40. Nowhere, everywhere premiums are higher. Okay, leave it alone. Look, SPY tested today, trend line, man. Look at 393 right there, beautiful. Broke the floor. Support is right there. Solid weakness on a SPY. Can't make money. Look at their market is flushing down right now. Look at the weakness. Man, I didn't trade here. Nice. That's the okay. So let's analyze what market is doing after that. Market is bouncing a little bit here. Previous day low is right here. Okay, this is the previous day low 393, just to give you idea. So that's a price label right here. This is previous day low. We did not test yet. Okay, we did not test the previous day low. This is the support. Okay, a lot of resistance. So whatever I said in the video yesterday, that's what it might look like to me. 393.29. We break that. And that's your trend line. That is your trend line. Okay, that's the trend line. I bought a 388 put and sold at 21%. When did you buy? What is the expiry today? 388 put. Two days out. Okay, good. That's fine. And when did you buy it? You buy it at the top, here, or here. There are three different tops. Trying to understand, you bought it here, or where, which point. So per percentage of profit you mentioned, that's why I want to see you bought it at the top, bottom, just now on cloud broke, which point. When you buy far out, the IVs are way high, so you get benefit too. Low theta decay, but implied volatility is super high. Nice day. Yep, absolutely great job. Oh, 150 jumped in. And took the coin down big time. If any alert today so far, 12 o'clock. 12 o'clock, nothing. Everything happen is this right here. Tesla bullish. Look at Amazon, guys, today. 78 million puts been purchased. Crowd and Amazon. Amazon has a lot of puts. Let me see Amazon, what Amazon did today. Oh, yes, Amazon couldn't get off the deck today. Oh, no, it did. Google did this way. Amazon did not do. Apple did not do. So Amazon got a weakness today. Interesting. Let's see. Amazon. Yes. If Amazon could go, we could go south here a little bit, but when it goes, right now we have a support here to watch. $91.59 right here, around $92 right here. Once we break that, then yes, why? Because this is the previous day low area right here. So, but you see, weak above the body right here, weakness. Look at the weak above the body right there. That's the weakness showed up that Amazon done for right here, this price. And then high value area, volume right here. The volume start lowering down now. MACD in a bear territory too. And sloping resistance building right here. Look at that. Right, you see that? This wedge could break downward. Okay. Mm-hmm. Look at the wicks popping. Google HOD. Microsoft bouncing. Weakness coming in. Excuse me. Market going down. Apple testing the support area. There's another guy on the Top Trading Edge created his ID on Twitter, but his handle is everything is capital. Top Trading Edge. He created a capital. This is fraudulent guy, fraud guy. Top Trading Edge. You see this capital. Top Trading Edge. So somebody has created Top Trading Edge. So if you can report, guys. He blocked me, so I cannot see him, right? Follow. But you guys can type it in Top Trading Edge on Twitter. Top Trading Edge, and you're gonna see all capital. That's the fraud guy. So can you, somebody can see how many followers and screenshot you can send me, so I can create more information about the fraud guy. Report.
What do you mean to say he's on Twitter?
Yeah, he's on Twitter, but his ID is everything in capital. I do not have everything capital.
Oh yeah, I do see that. There are 19 followers.
Yeah, if you can report, so
Last tweet was on 18th of November.
I reported and I blocked him. Block is okay, you can report him. Report is important. If anybody can see and send me a screenshot how it look like his.
Yeah, I'll send it to you.
Thanks. Thank you for everybody who is here around sending me, man. These are a lot of fraud people out there. One guy said they one of the other user trying to ask the money from different people. Man, people do crazy things. VIX is popping. Somehow VIX is climbing high. It's nothing much. mRNA loading. I would wait for mRNA supports. What's up, Harshad? Vikas Mehta, thank you. I just messaged you with the link. Thank you. Let me look into no link. I cannot, guys. It will not work for me because when you send me a link, it will not open because he blocked me. So he doesn't want me to see what he is doing. Oh yeah, right here. So this is the fraud guy. TopTradingEdge. Capital 19 followers. He has 19 followers. Why do they do all these kind of things, man? What do they gain? Market is bouncing. He has a 19 followers, so if you can report, everybody can report as a spam. Fake one. You can write a comment on it, it's a fake one. Look, he did the perfect math. He said, this is what I did. Go to the this one right here. Start reporting. Right here. Report. You see this? Click on report. And then this is what some start reporting. And then it says everyone on Twitter this effect. Yeah. Something like that. Yeah, thank you, Matt. The faster we all report, so nobody get, because he's asking money on that too. He said on a message, he says, hey, DM me money. DM money, direct message for money. Right here, these are fraud people. So if everybody report, eventually Twitter will know. Other TopTradingEdge underscore account is still open. Anybody can check, because I cannot check because I blocked. I mean, he blocked me, so I cannot check. But if anybody can check, TopTradingEdge underscore. Remember last time one more fraud. That account exists still, or Twitter did anything or not? Apple plans to slow hiring and spending for some time. Okay. Yeah, there's a lot of message.
So 40 minutes more for Powell to speak.
Yeah, 1:30. No, yeah, around. You're right. 50 minutes. 53 minutes left.
50 minutes.
53 minutes.
Yeah, it looks like the market is getting a little excited. What does it look like?
Right now, market gonna ping pong. You know, so what I see here is they are trying to collect the premium from all the traders. Basically, that's what they are doing those. So I'm not trading crazy anything until event is over. I want to see what they are doing. I don't want to pay $3 premium on a SPY and 0DT. That's too much. Outrageous. $2.50 too much.
What's the delta?
Delta is same. Delta would be 49%, something like that, I guess. Hold on, let me check. Delta, okay, yeah, 50%, 50 cents. It's the same. Delta is same, but the dirty game they played. So I don't want to, it's not much can make. So what they did is they brought the Vega up. 32 cent Vega, they brought it up, and they brought the Gamma down today. Wow, that's the trick they played on, compared to normally when I watch all the options. Oops.
Yeah, because nearing expiry time. So
No, sorry. I was looking at the wrong date. I'm
you
sorry.
must be looking at OTM.
No. I made a mistake looking at the wrong time frame. Hold on. I need to I'm checking something. I'm trying to verify. Gamma is here. 25 cents. Yeah, absolutely. Yeah. So what they did is they bring the Vega down today. Normally Vegas are like, they brought it down big time, Vega. So if you take a look at the Vega, normally used to be like 1 cent, and now normally is 1 cent, now is 3 cents Vega. Okay, and the Gamma is 7 cents right now, and Gamma used to be 25 cents. Okay, yep. So they bring down the Gamma. So if the even $1 stock goes up, you're not gonna gain anything. You gain only 7 cents compared to that. Interesting. Man,
So which means no point writing off as well.
yeah, they just interesting. What do you think for Zoom? Zoom broke the floor, 669, looking more weakness, Zoom. So Zoom is heading is lower, 58, 59. So let me see what exactly happens, Zoom. Zoom is under value, okay, but the technology stocks are right now is going to be, because that's the Cathy Wood stock too. So I would not short, I would not go long. It's just too much oversold, and it could bounce a little bit also if the market maker has to recover the short. So I don't go. Gamma burns for the bulls. The Gamma can burn for the bulls and the bears both. If opposite direction goes, same thing. It applied both direction, north and south. The market is trying to bounce. What's up, Joe? Google HOD. Today Google is bullish. We got a strong resistance on the top cloud. But after this sell-off, I would not expect bounce. I mean, I would not expect to go more down. I'm gonna compress out here till the Powell comes out.
Keep an eye on the DXY. 106.90 is the key. So it's forming a cliff.
DXY.
So 106.90 is the key.
We are above the cloud though still, but found some weakness.
I noticed that the
What?
yesterday, if you notice, it had like a pullback.
On.
It had like a rising wedge yesterday on the spot, and then it kind of like dropped after it came out of that wedge today and hit this 394 area. So it looked like it still might have some downward pressure to the next little demand zone, but if it drop under that 394, 390 look like it could be his next spot.
Well, I think we did. I think everybody's waiting for Jerome Powell. That's what I can see right now. I mean,
Yeah, that too. Yeah.
and if you look at these, the price of control line is the same spot where we were yesterday, right here, far from there. So what does it mean? That means the magnet is up there. They can pull back. If that's what it. Unless the magnet come down. Right now, the magnet is sitting at the top. Still, the magnet is up there. So volume node is at the bottom here around 394 area volume node, right? But the point of control is up there. So unless the point of control moves down heavier here, then I would believe until then is just the volume node is right now around lower side. If you see my screens, we are here 394 area. So hey, the magnet is up here, the price is here. So let's see what it brings. We got 101 like. See if anybody didn't click the like, you can click, make it 125. Elon Musk yesterday tweeted that Fed need to cut the interest rate, right? Did you know that? Yesterday I tweeted about it. Market want to go north. Right here. Trend is concerning. Fed need to cut the interest rate immediately. They are massively implying the probability of a severe recession. See that? What did I say? Magnet is up here. As soon as the Powell start answering the question, it will become bearish. Get ready.
Can you put him on live?
Yeah. Yes, I will. That's the reason I mentioned the headline. Jerome Powell live 1:30. I will do. We're gonna listen, okay? We're not gonna see. Apple bounce. We were right that there. Price of control line is here. DG earning. DG. Dollar General earning tomorrow. Okay. Man, their earnings are always good, despite China lockdown, right? And they are expecting EPS is lower than the previous. They could beat the earning. Recession proof Dollar General. See that? Recession. And is undervalued. $3. Okay. Yeah. So for me, is like market maker. They can take a toll on this company too, because it's too high, right? A lot of people park the money here, and they can tank. If they want to, good news could be bad news. Remember, they can do that kind of ugly work. So DG, let me look at option activity. DG. IV is alright. Volume is very low. Calls and puts. Nothing much activity on it. Theta decay is super high. Gotta be careful. They jack up the price. So I would say if the Dollar General moves, I'll give you right now $6. You're not gonna gain $6 to $7, 7% up and down. 6, 7, approximately $7. And then the IV probably around $8. Okay, to be safe, $8 calls or puts. Anybody buys calls or puts, $8. Yeah, you're not gonna gain anything if your option expiry this Friday. $8 goes up or down, nobody gonna benefit unless more than $8, then you can benefit. Look at that.
Yeah, it looks to me like Dixie is just ready to jump off the cliff.
Market is creating a lot of cycles here. Got the price of control line, that's the resistance. Look at the Google HOD, constant going up. VIX is going down. PDD is flying high, guys. PDD. We broke to the roof today and undervalue. So PDD is good. Its target is 104. Is PDD a meme stock now? They're performing. Look at this company. Look at that EPS and everything. They're doing good. It's undervalued. They've been heavily shorted before. Look at the short. Target 104. What is it? Nope. Oh, okay. Now look at the symbol. Nope. SPY 395 call. What is it? 395 call. Okay. Expiry 11:30. What about it? Very high. Theta value is very high. Obviously, because that's the game. That's the game we all participating.
Josh, I don't know if I did it the right way, but I loaded up on 387 puts. Think I should have did that, or I should have just waited for the speech?
Man, you guys are asking me a lot of questions. That question is a dangerous question. I don't believe in going first. I believe in what they want to do. I care about is my share, which is 20%, 30%, whatever I want to make. I'm not here. This is what I teach you, right? What I teach you is we don't care 100%, 200%. We care about is at least something, right? We don't care how far, what not. We just need a momentum to catch. But if we think it's gonna go north or south and then opposite direction goes, imagine what we end up in, the disaster, and plus theta decay and holding times and again. So I would rather, that's why I'm not trading. You saw I'm not trading. I want to wait. I'm not gonna pay $2.30. Now it came down, premiums 180, but still. So I need momentum. When that happens, we will see it. So for me is I learn lifelong lesson. So that's what I teach. Not to go first. Let them go first. I don't care about top. I don't care about the bottom. I care about little portion. That's it. But I want market maker to go first and give me a better entry point in terms of price, because right now they are right now setting up the trap, taking all the money from the all the money from the options. People are buying bulls and bears both, and I announce it's too much premium. I'm not gonna pay that premium. SPY theta decay is crazy, right? Yep, they know exactly what to do. The moment it goes up and opposite direction, the theta decay numbers are crazy. If I compare with, okay, let me see previous history.
Lots of orders on the euro dollar that shows.
One second. I'm also need to compare something real quick. Weakness coming in, rejection coming in. Not the weakness, but price is holding strong out there, man. Look at that. Price is going up, weakness coming in. And that's the sloping resistance. Look at that. 1, 2, and 3 now, right? And that's the point of control is right here. 395.15. This is market is creating look like a W here, but this is not a divergence, it's a weakness. Only this divergence, which is this, absolutely. Strong resistance out here.
Strange. Why are the orders at 117 Meta? Can you just check?
What's that? Meta?
Yeah.
Meta got a resistance, but Meta is bullish, curling up and then pull back a little bit. Meta got a resistance at around $112. $112. Yeah, but eventually Meta is looking bullish. I don't see a Meta bearish. Long term is bullish. You can go and finish here. This area. 114 area. 113.50. We are at the critical area. Let's see what happens here. If we break these two, and we could go higher. Get a rejection, we could go lower. VIX is going down. VIX is Powell time. Yep, 8 more minutes to go, Powell. And market is showing bullishness right here. VIX is pulling back. Okay, if I see something. All right, guys, we got a 101 like. Let's make it more like if we can. Let me see if I can find something. Six more minutes to go.
No, I just took a chance, picked up some meta just for the sake of it. Stops at 111.
Meta is today Dow is down, Nasdaq is up, S&P 500 is down.
Yeah, it's a risk though. I don't care.
Crypto exchange Kraken lays off 1,100 employees. All the exchanges are really targeted. I said this thing in summertime that they're gonna go all these. One second. Yep.
So SPX, Dow Jones, everything rectangle.
Yeah, VIX is going down. VIX is going down, and price of control line is right there. Sloping resistance is breaking up. Mm-hmm.
There are too many potatoes, hardly any doves in the market.
Mm-hmm. Three more minutes to go. Let me see if I can bring the live stream. Let me see live. I can bring CNBC. One more minute. I have. 1 more minute to go. I'll be right back.
Good afternoon. I'm Glenn Hutchins, co-chair of the Brookings board, and on behalf of our president and some of my fellow trustees who are here in the audience today, it's my great pleasure to welcome all of you, both our post-pandemic in-person audience here, packed house, great to see, as well as our sizable broadcast and online audience. Thank you for joining us today. When President Obama named Jay Powell to the Federal Reserve Board in 2012, no one, including I suspect Jay, expected him to become
Look at that.
chair. When President Trump named Jay Powell as the Federal Reserve Chairman in 2018, hardly anyone anticipated a global pandemic. And don't forget that then the Fed's challenge was too little, not too much inflation. So Jay Powell has repeatedly been forced to confront the unexpected and had to steer the United States economy through uncharted waters. He's done it with a steady hand, great personal integrity, independence, and an unwavering commitment to the Fed's dual mandate, price stability, and maximum sustainable employment, though I don't think I need to explain any of you that today, despite stiff headwinds, both economic and political. So we're pleased to welcome to the stage today, on behalf of the Brookings Institution and the Hutchins Center on Fiscal and Monetary Policy, Jay Powell. Following his remarks, Mr. Powell will field questions from David Wessel, Director of the Hutchins Center, and from the audience. Jay, thank you for joining us.
Thank you, Glenn. It's great to be here today. It's great to be back at Brookings. So today I'm going to offer a progress report on the FOMC's efforts to restore price stability to the U.S. economy for the benefit of the American people. And that report must begin by acknowledging the reality that inflation remains far too high. My colleagues and I are acutely aware that high inflation is imposing significant hardship, straining budgets, and shrinking what paychecks will buy. This is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. We currently estimate that 12-month PCE inflation through October ran at 6.0%. While the October inflation data received so far showed a welcome surprise to the downside, these are a single month's data, which followed upside surprises over the previous 2 months. As Figure 1 makes clear, down months in the data have often been followed by renewed increases. It will take substantially more evidence to give comfort that inflation is actually declining, and by any standard, inflation remains far too high. For purposes of this discussion, I'll focus my comments on core PCE inflation, which omits the food and energy inflation components, which have been lower recently but can be quite volatile. Our inflation goal is for total inflation, of course, as food and energy prices matter a great deal for household budgets. But core inflation often gives a more accurate indicator of where overall inflation is heading. 12-month core PCE inflation stands at 5.0% in our October estimate, approximately where it stood last December when policy tightening was in its early stages. Over 2022, core inflation rose a few tenths above 5%, and it fell a few tenths below, but mainly it moved sideways. So when will inflation come down? I could answer this question by pointing to the inflation forecasts of private forecasters or of FOMC participants, which broadly show a significant decline over the next year. But forecasts have been predicting just such a decline for more than a year, while inflation has moved stubbornly sideways. The truth is that the path ahead for inflation remains highly uncertain. For now, let's put aside the forecasts and look instead to the macroeconomic conditions we think we need to see to bring inflation down to 2% over time. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. There's considerable uncertainty about what rate will be sufficient, although there's no doubt that we've made substantial progress, raising our target range for the federal funds rate by 375 basis points since March. As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections. I will return to policy at the end of my comments, but for now I'll simply say that we have more ground to cover. We're tightening the stance of policy in order to slow growth in aggregate demand. Slowing demand growth should allow supply to catch up with demand and restore the balance that will yield stable prices over time. Restoring that balance is likely to require a sustained period of below-trend growth. Last year, the ongoing reopening of the economy boosted real GDP growth to a very strong 5.7%. This year, GDP was roughly flat through the first three quarters, and indicators point to modest growth this quarter, which seems likely to bring the year in with very modest growth overall. Several issues: war against Ukraine, and our policy actions, which tighten financial conditions and are affecting economic activity, particularly in interest-sensitive sectors such as housing. So we can say that demand growth has slowed, and we expect that this growth will need to remain at a slower pace for a sustained period. Despite the tighter policy and slower growth over the past year, we have not seen clear progress on slowing inflation. To assess what it will take to get inflation down, it's useful to break core inflation into three component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services ex-housing has fluctuated, but shown no clear trend. And I'll discuss each of these items in turn. Early in the pandemic, goods prices began rising rapidly as abnormally strong demand was met by pandemic-hampered supply. Reports from businesses and many indicators suggest that supply chain issues are now easing. Both fuel and non-fuel import prices have fallen in recent months, and indicators of prices paid by manufacturers have moved down. While 12-month core goods inflation remains elevated at 4.6%, it has fallen nearly 3 percentage points from earlier this year. It is far too early to declare goods inflation vanquished. But
Super bullish.
if current trends continue, goods prices should begin to exert downward pressure on overall inflation in coming months. Housing services inflation measures the rise in the price of all rents and the rise in the rental equivalent cost of owner-occupied housing. Unlike goods inflation, housing services inflation has continued to rise and now stands at 7.1% over the past 12 months. Housing inflation tends to lag other prices around inflation turning points, however, because of the slow rate at which the stock of rental leases turns over. The market rate on new leases is a timelier indicator of where overall housing will go over the next year or so. Measures of 12-month inflation in new leases rose to nearly 20% that have been falling sharply since about mid-year. As Figure 3 shows, however, overall housing services inflation has continued to rise as existing leases turn over and jump in price to catch up with the higher level of rent.
Magnet is down here, guys, okay? But market is going up.
To continue well into next
But that's
year.
fine.
But as long as new lease inflation keeps falling, we would expect housing services inflation to begin falling sometime next year. Indeed, a decline in this kind of inflation underlies most forecasts of declining inflation. Finally, we come to core services other than housing, and this spending category covers a wide range of services, from healthcare and education to haircuts and hospitality. This is the largest of our three categories, constituting more than half the core PCE index. Thus, this may be the most important category for understanding the future evolution of core inflation. Because wages make up the largest cost in delivering these services, the labor market holds the key to understanding inflation in this category. In the labor market, demand for workers far exceeds the supply of available workers, and nominal wages have been growing at a pace well above what would be consistent with 2% inflation over time. Thus, another condition we're looking for is the restoration of balance between supply and demand in the labor market. Signs of elevated labor market tightness emerged suddenly in mid-2021. The unemployment rate at the time was much higher than the 3.5% that had prevailed without major signs of tightness before the pandemic. Employment was still millions below its level on the eve of the pandemic. Looking back, we can see that a significant and persistent labor supply shortfall opened up during the pandemic, a shortfall that appears
We could go man 402
anytime soon. Comparing the current labor force with the Congressional Budget Office's pre-pandemic forecast of labor force growth reveals a current labor force shortfall of
because market everybody's bearish, right? That's why.
This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall participation, however, remains well below pre-pandemic trends.
Still the EMAs are bullish.
Gap reflects workers who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly. In addition, many older workers lost their jobs in the early stages of the pandemic when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers, given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people. The data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths
396 put, I mean 98 cent.
1.5 million missing workers. Policies to support labor supply are not the domain of the Fed. Our tools work principally on demand. And without advocating any particular policy, however, I will say that policy to support labor force participation could, over time, bring benefits to the workers who join the labor force and support overall economic growth. Such policies would take time to implement and have their effects. For the near term, a moderation of labor demand growth will be required to restore balance to the labor market. Currently, the unemployment rate is
It could bounce, okay? The higher high, higher low, higher high, higher low.
And job openings exceed available workers by about 4 million. That is about 1.7 job openings for every person looking for work. So far, we've seen only tentative signs of a moderation in labor demand. With slower GDP growth this year, job gains have stepped down from more than 450,000 per month over the first 7 months of the year to about 290,000 per month over the past 3 months. But this job growth remains far in excess of the pace needed to accommodate population growth over time, about 100,000 per month.
This is a temporary pullback.
Job openings have now fallen by about 1.5 million this year, but remain higher than at any time before the pandemic.
Yeah,
Wage
market.
growth, too, shows only tentative signs of returning to balance. Some measures of wage growth have ticked down recently, but the declines are very modest so far relative to earlier increases and still leave wage growth well above levels consistent with 2% inflation over time. To be clear, strong wage growth is a good thing, but for wage growth to be sustainable, it needs to be consistent with 2% inflation. So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex-housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening.
Wow, beautiful.
Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation.
35% profit, I'm out.
The time
$1.35.
for
38,
may come
37%
as the
profit.
December meeting. Given our
You see this?
progress in tightening policy, the timing of that moderation is
Done
far
for the
less
day.
significant than the questions of how much further we will need to raise.
On the week about the body, green and red right here.
and, the
And then I announce the weakness. Then I see the candle here.
It
Palming.
is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done. Thank you.
Event is over.
Thank you very much, Chair Powell. I think you spared me the chore of asking you to pick between 50 and 75, so I won't have to ask you that. Thank you for your last paragraph. But I want to talk a little bit about wages and inflation. So, as you said, wages are rising faster than is consistent with a 2% inflation rate, assuming reasonable productivity. You said in November that wages are not the principal cause of prices going up. But for many workers, real wages have been falling lately. So I wonder, isn't there room for wages to
Look at the
rise
MACD is
faster
weak, price
so
is not.
workers can make up lost ground? And what level of wage increases do you think is consistent with a 2% inflation target?
Okay, so I guess I would start by saying
Magnet is sitting right here, all the way bottom.
inflation that we saw at the beginning of this episode back in March of 21 was not really related
Trend
to
is
wages at
breaking.
all. It was related to tightness in goods markets, largely due to supply chain issues. Over time, though, inflation has now spread broadly through the economy. And while I would still say that the inflation we're seeing now is not principally related to wages, we think that wage increases are probably going to be a very important part of the story going forward, particularly as
It's on about 34,000, target 34,106.
services ex-housing. So, so we think it is an important thing going forward. And ultimately, in the service sector in particular, where wages and benefits are by far the largest cost, wages need to go up. And of course, we want wages to go up. We want wages to go up strongly, but they've got to go up at a level that is consistent with 2% inflation over time, making basic assumptions about productivity. So if you look at the principal wage measures that we look at, I would say that you're 1.5 or 2% above that.
Market already
current wage
showing up the
increases.
weakness.
So, particularly
MACD, huh?
employment compensation index and the average hourly earnings index. Look at those two. It's about 1.5% higher than what would be consistent, making various adjustments, including for productivity, from nominal wages. So, as we look at the labor market today, including today's JOLTS data, what you see is a labor market that there's a real imbalance between supply and demand. There are 1.7 job openings for every unemployed worker, everyone looking for a job. The so-called jobs workers gap is about 4 million, meaning if you look at all of the available jobs, including people who are working, and then look at people who are in the labor force who are looking for a job, there's a 4 million shortfall. So you're in that world, and we think that there's a job for moderating demand in there and getting the labor force back into balance.
You don't think that there's a possibility that we should have a period of catch-up of wage increases above the sustainable level, and that businesses with relatively fat profit margins can absorb some of that without passing it through?
So that's the question of the worker share of profits and that kind of thing is not really related to this. Right now, people's wages are being eaten up by inflation. So what you want to do is you want to have inflation stable and then have a very strong labor market.
Market got a
where
weakness
the
and
biggest
prices
wage
going up.
increases are going to the people at the bottom end of the spectrum. And we had that at the end of the very long expansion that ended with the pandemic. That's not what we have now. Now, for most workers, the increases they're getting in wages are being eaten up by inflation. That's actually not true at the bottom end, where wage increases are higher than inflation. And that's a good thing. But if you want to have sustainable, strong labor market, where real wages are going up right across the wage spectrum, especially for people at the lower end, you got to have price stability. And until we restore that, we can't get back to that place where we kind of were for the 2 years before the pandemic hit.
And did you take, when you looked at today's JOLTS data, which measures the vacancies and quit rates, did you find that encouraging?
More or less in line with expectations, but that's
Going in the right direction.
That's a good thing, right? So I guess job openings came down.
We're not going to see Powell in 2 weeks and Fed blackout for 2 weeks, so that's bullish,
As you know,
isn't it?
the relationship between
Sideways.
job openings and unemployment is a very fraught one. And job openings right now, compared to unemployment, are at their near their all-time
Still bullish.
levels. So it has been our view that there's
Market not giving up.
in this highly unusual situation in the labor market could come back into balance to some extent through a decline in job openings, and that there's been a typical relationship between increasing unemployment and declining job openings, but that our thinking has been, and many labor economists share this, that you could get a decline in job openings that wouldn't produce the same increase a smaller increase in unemployment than is typically the case looking back in history, because of the very outsized level of job openings. And we've kind of seen that so far, but it's way too early to say that'll
So,
work.
traditionally, the Fed looked at the unemployment rate as a measure of labor market tightness, and we've seen recently that may be misleading. Unemployment rate is still very low, and as you pointed out, job vacancies is trying to come down. But
So the week cycle actually turns on the 7th of December.
Kind of relationship.
So from the 7th or
Going
the,
forward,
add 1 or 2
natural
days
rate
from
of
that,
unemployment,
7th to the
useless
9th.
How will the Fed? What measures will the Fed
That's
use
where
to
we
judge
should
labor
see
markets?
the big spike for the next 13 days, so 7, 8,
So I
9,
think
10.
the way we think about it, of course, the standard way to think about it is it's the gap between the actual unemployment rate and the natural rate of unemployment that matters, right? And the issue really, it's not that framework doesn't make sense, it does make sense. But the issue is that the natural rate of unemployment is very hard to identify with certainty, even in normal calm times. But when there's a violent disruption of the labor market, it can move very substantially. So, and that happened at the beginning of the pandemic. You had the labor market was very much disrupted, and we assumed that the natural rate had moved up, meaning that for any level of unemployment, the labor market is tighter. So we knew that. I think what was
So
different.
that means from
in
the
this cycle was
21st
really
of
that you had to
December
look at
plus 50
things
days.
like job openings and
That's
quits, and reservation wages, and
excluding
just
the
wages overall,
Saturdays and
to tell
Sundays.
you that the
Yeah.
natural rate of unemployment had really moved up quite a lot.
Still EMAs are bullish.
Right here.
But it is a
spot.
fact, though, that it's very hard to pin down where the natural rate of unemployment might be when there's this massive disruption in the labor market going on.
So do you think?
Still the MACD is same, but EMAs are bullish. So and projection and EMAs are bullish. MACD is bearish, and the clouds are sideways.
Yes.
So, look like
think people will tend
wanna
for
shoot
now,
up a little
people
bit?
tend to look at it
Well, when you
because
tell them you're looking at it, they tend to look at
they'll
it.
look at it.
Yeah, look at that. Look at that. 400.
That's right. I think I would just say in this particular
Higher
situation,
high.
we think it's important, and we're going to find out empirically whether that was true. For the reasons I explained, we think that we can see a big decline in job openings.
We have a gap. We're not coming down.
Less than you would expect of an increase in unemployment. So this was a unique in so many different ways.
MACD is still
So many
bearish.
events was-
Prices are bullish. So
One in particular is just that so much of the inflation was due to supply side constraints,
Right.
which is not a feature of the U.S. economy. For
projections are bullish.
Well, but Vice Chair Lael Brainerd said the other day in a speech that
Because all the retailers are bearish. Remember that. That's why market is bullish.
labor supply, deglobalization, climate change could reduce the elasticity of supply, and that this may be a problem going forward. Do you share that?
So this is a great set of questions that we've all been thinking about a lot, and Lael's speech was really terrific on that. Obviously,
MACD is trying to cross.
including one at Jackson Hole.
Yeah, we're just 43 points away from line in the sand. So let's see if it breaks because 34,000 is
the
huge
question
volume.
is, is the new normal going to be unlike this normal that we've had where supply side disruptions and constraints were relatively, you could look through them. The lore has been for a long time that you don't need to worry about that and it sort itself out. A supply shock from oil prices or whatever. Are we going into a situation a little bit like the
Diverge.
39 points.
where ongoing repeat shocks, and which would tend to put more upward pressure on inflation over time? We don't really know. I mean, it's a great question.
If you break this, it's more
I
bullish.
guess the real question is, if
At
that's
a
true,
rejection,
what
there is a
implications?
divergence.
We still have a 2% inflation target, and we still have to use our tools to achieve it and to keep inflation expectations anchored. But it's very hard to know. It's very hard to know the answers to these things. I mean, we tend to assume things will go back to the way they were, just naturally, but that doesn't seem to be happening so far.
Right, right. Now, you mentioned in your remarks that forecasts of inflation have, not only those at the Board of Governors, but in the private sector as well, have been lousy. Inflation has not behaved the way the forecasters said. So I wonder how you think about
Maybe we're gonna go to
using
400
forecasts of inflation and making policy. If you
Yeah.
can't,
because all the
or if your staff
puts
can't
were higher.
give
Remember, puts were higher, so they're gonna wash out.
confidence what inflation
20
is
points
gonna
away.
be 6, 12, 18, 24 months out. How do you think about that in
Line in the
deciding
sand,
when you
we
make
are
policy decisions?
definitely going to
So I'll
34,100.
say that the
If it breaks, I'm gonna go to the call.
Forecast inflation now, and one
Yep,
of the
right
reasons
there.
is that the situation is so different from the normal one. And as I mentioned, a lot of it is just that the difficulty is just.
Line in the sand.
We had no experience in forecasting that. It was, this was a case of first impression. So
400 call.
that was very difficult. Nonetheless, we do make forecasts.
90
We continue to
cents.
make Forecasts. The way I tried to get around that in my remarks was to say, let's put the forecasts aside for a second and let's try to identify the macroeconomic conditions that we think we need to see that would put downward pressure on inflation. So that's a way to think about it. We'll continue to make forecasts, but we're going to have to be humble and skeptical about forecasts, I think, for some time. And that calls for a lot of risk management. And the other difficulty, of course, is that monetary policy works with long and variable lags, in particular inflation.
$1 paid on 400 call.
And so if you're waiting for actual evidence that inflation is coming down, it's very difficult not to over tighten if that's all you're doing. So we have a risk management balance to strike, and we think that slowing down at this point is a good way to balance the risks of
Slowing down
overtaking
on the
versus-
pace of rate
on the pace of rate hikes.
Yes. But it's still a problem if you can't use today's economic conditions that you think
Boom.
are likely to generate more or less inflation. Is that
Well,
Trying
first
to
of all,
exit.
I'm agreeing that it's a very difficult situation in which to
We're gonna
forecast
touch down the
inflation.
400.
Really, very few professional forecasters have gotten it right. So I think we'll look at various things. We'll look at our forecasts. We'll look
160.
at the actual data. We'll look at, I gave you the three pieces and the very
18.
elements of those three pieces of core inflation that we're looking at. We will, look at these macroeconomic conditions. For example, we will try to identify a level of a stance of policy that's sufficiently restrictive to bring inflation down. You can't identify that with great precision and confidence, but we'll look at the changes in financial conditions and the effects that those financial
19% profit, I'm out.
on the real economy. We'll look at all of those things and make a judgment.
Okay. Look at that candles. 1, 2, 3, 4, 5, 6, 7 candles stacking. Breakout. Look at that breakout, right? Beautiful.
Frequently about
Look at that. Still want to go.
policy restrictive, and that often is
Man, I
used
exited early. I could have had 30% profit.
is above some neutral
I'm
rate of
telling you,
interest, the one that would prevail when
34,106. That's
all
where we
is
hold.
calm, and you gave a
No, it's
speech
still
about
looking
some
good. You know what? There's a gap here to be filled.
how identifying all these things.
Oh,
that
wow.
actually
There's a gap.
unemployment,
Oh, yeah.
actually
Gonna go.
I told you there's a
You
gap.
don't know what
That's
they
why.
are. So how will you know when policy is restrictive? How do you think about what the neutral rate is under the current conditions of the
And
economy?
the answer to that is that there isn't any one perfect summary statistic. So the way I think about it, and I think the way we generally think about it is,
403.20
we make our
cents.
policy changes and they affect financial conditions.
Oh,
Actually,
they're gonna
it works
leave the
the other
gap
way
here
around.
and
Financial
play little
conditions tighten
games.
an expectation now, different from what it used to be. So they tighten it. So we monitor the tightening of financial conditions. We look at
I wanna
the history
play.
of these financial conditions index, and we ask how tight are financial conditions. We also look at the effect that
20 cents.
tighter financial conditions are having on the real economy, particularly now interest-sensitive spending, but also other things as conditions tighten. We also look. So, what are the financial conditions we look at? We'll look at the entire rate curve. If you think about risk-free, the Treasury rate curve.
See, so people wanted to buy the calls and puts early,
Positive real
right?
rates
No good, right?
across the curve. And
Sometimes it works, sometimes doesn't work. That's not the way to trade. You just need to wait for the
but you've got to pick some sort of
opportunity.
forward-leading.
Otherwise, you remain bearish or you remain bullish and you lose money.
Inflation compensation in the markets definitely reflects confidence in us bringing down inflation. So you've got real rates really across the whole yield curve. You also look, though, at credit spreads and what are private companies borrowing at, because most borrowing doesn't happen at the federal funds rate. It happens in many other places.
It's okay. We have 50 points to go higher.
At,
You can still make money on the calls.
I'm done.
So look at all those things.
I just need my portion. I don't care. That's why I played. I'm done.
Looking at, put some weight
But
on.
I think
I think
we are going to 4,061 SPX.
Yeah, I was able,
4,007, and there's a gap again.
Seem to be one of the big factors. in
I
that.
was able to jump out with 50%.
It's in there. You look
That's
at the real
good.
rate curve. So you look at the real rate curve.
When they are bullish, we gotta go bullish. They want to go north. That's what I can see.
Rates to be above what we estimate as the longer run neutral rate. The issue is, the longer run neutral rate is a
23.
rate
Okay, I mean 403.
at a time
23
of
cents.
unemployment and 2% inflation and the economy in perfect equilibrium.
On these, I will
That's where we are.
little hold it. I just put my 50% profit.
Can I turn to the balance sheet for a minute? I'm gonna
And it becomes zero, I'm all right.
Asian markets are going to split up like a
What
volcano.
criteria are you going to use to decide
Yeah.
when to end?
It
this?
becomes zero, okay, I'm all right.
The economy, is it whether money markets are functioning?
Because there's a
well?
gap here and market might not feel and they play dirty games. God knows what to do.
When you've shrunk enough. When you
So there's a
end
gap
this-
here.
So I should
If they
refer
feel,
you to
because today is the only chance to fill up the
that
gap.
lays all this out in detail, that I really should be reading to you, but I'll
I am.
paraphrase it.
Thank
so
you.
If I don't get it exactly right.
No one will pay attention if you
No.
don't get it exactly right. Don't worry about
Pretty much wing
it.
it.
Relax.
So, we're in an ample reserve regime, and what that means is that changes in the reserve level will generally not affect the federal funds rate. So there's more than
It's about
reserves in the system. So we're
It's
not
about
close
like
to
what
this.
sentiment of the
So
market.
What we said is that we would
Everybody's
allow
bearish, so that's
reserves
why they want to take it long.
until
You follow?
we're
That's the game.
somewhat above the level that we think is consistent with an ample reserve, with scarcity.
Right.
And then for a while, what you do is you hold the balance sheet constant, and non-reserve liabilities grow while reserves shrink. So we sort of shrink gradually down to that, and then at a certain point, we're just going to call it. We're not looking to really go back into proving that they're
It's
scarce.
looking like it
Because
might
what
be
happens
running out
is,
a
and you
little
saw this
gas.
back a few years, the demand for reserves is not stable, and
Right.
it can move up and down very substantially. So we want to stop at a place that's safe. Having a lot of reserves in the system is really a good thing. It's really a public benefit to have plenty of reserves, plenty of liquidity in the markets and in the banking system, the financial system in general. So that's how we would do it.
In the minutes, the last FOMC meeting, it said the staff had a forecast that does not, it forecasts below potential growth.
They might pull back, okay, because the gap,
But then there was
everybody
this
thinking is a
interesting
gap,
sentence where
and they pull back, so
the
I'm gonna
staff
take
said
the profit.
possibility that the economy would enter a recession sometime over the next year
25
is
cents.
almost as likely as their baseline forecast. Is that how you look at it?
So I have resisted the temptation
Okay, I'm out.
to handicap it.
25 cents.
I think I'll continue to do that, but I get. the
Took a
way
2 cent
I think of
profit.
it is I do continue to believe
Okay.
there's a path to a soft or softish.
I know it look like fill up the gap right away. Look, I just exit right now, man. Shit. I could have.
And you exited and look at that,
I understand it goes up, but not-
34,106.
Alrighty,
it's not a hard
27.
landing, It's not a severe recession. You could think of unemployment going up, but not really spiking.
Back in 27 cents.
Some recessions. So that's how I think about it, and I think the path is pretty clear.
Let's go and fill up the gap.
Conditions soften. We see inflation, and the goods inflation
Okay, here
gets
we
better,
are now.
housing services inflation gets better.
They're gonna pull
and
back
the labor
probably,
market
huh?
softens but doesn't go into recession, and you see inflation
Yes.
start to come down. And I mean, I think that's very plausible. I don't want to be the handicapper on it. And of course, our job is to try to achieve that.
Mhm.
And I think it's still achievable. Although, if you look at the history, it's not a likely outcome. But I would just say this is a different set of circumstances.
So you said at the last press conference that you thought the path to that soft landing had narrowed. Has it continued to narrow, or is it widened, or I don't know if you can have a wider soft landing, but
I don't know that it's changed since this is what, 5-6 weeks ago. I was asked the question, has it narrowed? Is it still possible, and has it narrowed? I said, it's definitely still possible. And it has narrowed because if you look over the course of this year, nobody expected us to raise rates this much.
Oh,
Nobody
wow.
expected inflation
Look at that,
to be
filling up.
strong and this persistent, and this, to move up to
I
a
put a
spread
35
so broadly
cents.
through the economy. And so to the extent we need to keep rates higher or keep them higher longer, that's going to narrow the path to a soft landing. On the other hand, if we get good inflation data and we get evidence that of all the things that I talked about, if all those things start to swing the other way, then we could very much achieve this.
in August 2020, you announced a new framework for monetary policy, the flexible average inflation targeting framework. And I wonder whether there's anything in that you think we should be rethinking now in light of the recent experience.
We said we would do another framework review in 5 years, and so that would be to bear fruit in 25 or 26. So that's what we're going to do. We're going to stick to that. I think we need to see this through a full cycle. We need to see the other side of inflation and what the economy looks like after this historic episode to really make good judgments about that. I will say, though, that aside from the framework itself, we implemented it through guidance of various kinds, and we put in really strong guidance because there were a lot of doubters that we would ever achieve 2% inflation. If you remember, that was the main criticism. Little did we
You can
know.
buy the puts now with a very tight
But,
stop loss.
one piece of guidance that
Very
we
tight
gave
stop loss.
was, and I don't think this had anything to do with or much to do, let's say it that way. It didn't have much to do with all this inflation we're experiencing. But the one piece of guidance that we gave that I probably wouldn't do again is
Yeah, weakness coming in.
until we saw both maximum employment and price stability. And I don't think.
Okay, I'm
I don't think
out.
I would do that again.
Because
Took 3 cent
I
loss.
think it limited. It's
Okay.
the tail risk. We tend as human beings to underestimate tail risk, and I think we didn't.
There we go. We halted 34,106 and we go
If you
down.
remember, 25 years of low inflation,
right.
and many years after the pandemic, after the global financial crisis of inflation everywhere in the world, it's all disinflation. Just didn't seem likely, and yet here we are.
So it turns out that when you invite the chairman of the Federal Reserve to speak at Brookings, a lot of people email you questions. Most
Really?
of them are questions I've already asked, or questions that were so poorly framed that I couldn't even understand the question. But somebody asked me this one, and so I want to give that person an opportunity to get an answer. What do you like to do in the morning before you start
So-
work?
Math is magic.
Work. No, I'm a super early person, and I read a bunch of newspapers and drink my coffee in peace, and then that's what I do.
And now
Still has a room.
Still ride your bike to the.
Some. I ride down. Well, I won't tell you where I ride, but I do.
Yeah.
I ride.
The security guys thank you for that.
Go ahead. No. Yeah.
Okay, so here's the deal. We're going to take questions from the audience. You need to wait for a microphone to get to you because we have a lot of people online. You need to say who you are, and you need to remember that this is not an opportunity for you to make a speech or tell the Fed what it should do. It should be a question, it should be short, and questions end with a question mark. So, somebody, Joe, and then Jonathan?
I think that's done.
Joe Belio from Brevin Howard. So you've spoken both about risk management considerations and the inherent danger of inflation becoming entrenched. So I was wondering, how much do risk management considerations suggest a terminal rate higher than would normally be expected to achieve your policy goals?
So I think there are a number of dimensions, and it wouldn't necessarily one of them would be potentially a higher rate, but more I would think one risk management technique is to go slower, right? To go slower and feel your way a little bit to what we think is the right level. Another is to hold on longer at a high level, and not loosen policy too early. I don't want to over tighten. Certainly, my colleagues and I do not want to over tighten because I think that cutting rates is not something we want to do soon. So that's why we're slowing down and going to try to find our way to what that right level is. But theoretically, it's another dimension, but it's not. It wouldn't be my first choice.
Jonathan?
Hi, thanks. Jonathan Pingle with UBS. So I had a question about the imbalance between labor supply and labor demand. One of the things that's a little obscured when we look at and discuss the labor force participation rates, there is a pronounced downward trend due to population aging. So when you think about realigning labor supply and labor demand, are FOMC officials hoping or expecting that participation really moved back up all the way to a pre-COVID peak? And related to that is, the follow-on question, how much of the realignment do you think needs to be done through restricting labor demand as opposed to the ability of supply to catch up?
So, on labor force participation, I think it's useful to go back, 10 years, and the forecast that mainstream labor economists had was that, and you're right, aging of the population leads to declining labor force participation. Notwithstanding that, labor force participation was up.
NASDAQ up at 2.5% NASDAQ today.
2013.
They're filling up the money into the NASDAQ.
And that was because you had a strong, tight labor
Yeah,
market.
and I'm also thinking after these crypto scams and exchanges going down one by one,
So,
they put the money into gold.
is not perfect in this, except over long periods of time, you have an aging population, so you're probably going to have declining labor force participation. I don't think it's reasonable to expect that we get all the way back to where we were with labor force participation in 2020. It's 63.7, I guess, population adjusted. I don't see that, but I wouldn't rule it out. And we're nowhere near that now. We're a point.
See, that's the reason.
So, the real question is, do we expect to see big chunks of labor force participation? I got to say, this year we've seen, in the aggregate, not much, and it's been very disappointing and a little bit surprising. So, that's part of the story. The other part is, I mentioned,
Yeah, here we go, right here, filling up the gap, and we go higher.
Labor force, a big part of the shortfall in labor force is actually population.
Man, call was great today, right here. Put calls, all were great today.
Workers are clearly anxious about going to work.
No, double top.
And given that immigration is well below the levels that were projected before the pandemic, does most of the balancing have to come on the demand side?
Well, I think for now, we have to assume that. That's why I talked about, supply side policies on labor, although they're not for us to recommend or to answer questions about.
Noted, please.
So yeah, the answer is yeah. I mean, that's what I kind of said that in my speech. We have to do what it takes to restore balance in the labor market to get back to 2% inflation, and that's what we're doing. Really, just by slowing job growth, rather than putting people out of work.
Go Danielle.
Thank you. Joe Gagnon, Peterson Institute. Chair Powell, back in 2018, you gave a speech questioning the role of the so-called star variables that the Fed uses to navigate. And there was a simple possibility raised that maybe unemployment could fall well below what the staff thought the natural rate U star was. Then, without causing inflation, then COVID came and turned everything around. And as you just said, one interpretation of COVID is that U star went way up and we were in the wrong side of it, which is inflationary. My question is, going forward, is it likely, do you think it's likely that things could reverse as the dust settles from COVID and we could end up back in that world where maybe we're on the other side of U star, we don't know it, it's hard to tell. What lessons did you learn from that period that got forgotten because of COVID?
Take a look at oil, inverse head and shoulder.
Unemployment went
1 hour.
below
Mm-hmm.
so what we write down and what the staff writes down is a longer run U star, longer run estimate of the natural rate of unemployment. I guess one thing I would say is that during the course of a long, relatively gradual, so we only have one
Daily?
experience, right, to generalize from. But what I learned from that experience was
On the 1 hour.
long, relatively slow.
It looks like a
not
perfect
super
inverse head
fast
and shoulder, but I doubt it's going to break the
we
neck. I
really
don't
saw
know.
the natural rate of unemployment, the shorter term natural rate, come way down. We had 3.5% unemployment with really little sign.
Yeah.
Wages were just getting up to that level of productivity and 2%
Bullish.
inflation. So we could be back in that place. I think we could certainly be back in that place.
That's the hourly.
With what we've seen.
We broke the resistance right here, and now it's bullish. But before inverse head and shoulder, $82. So
We
yeah.
did see
$82
the
head.
inflation we saw at the beginning. We did have natural rate of unemployment go up probably significantly. But the original inflation we saw was
That's the
not
compression zone right here.
Phillips curve, with
They
the
might
labor Phillips curve. It was not
control the
like that. It was the
price
labor
out here.
So I think another way to frame Joe's question is, I think a lot of us thought that
I think market gonna go and test the 200-day moving average.
and we didn't get inflation, that maybe over time, before you were in charge, the Fed was erred on the side.
Because
of
we never
being
test
conservative.
the 200-day. Remember
Worried
that,
about
right?
the unemployment
That's
rate
why.
falling. And I think the concern is that will we
Right.
fight the last war?
So
because
people
of
who are
this
shorting here
experience,
top, they
that
think
we'd
I'm
be
gonna short.
reluctant to
Be careful,
experiment with a low
because
rate.
today is not the day. But I got the water out of the short also, plus the
We
calls,
can get back to.
right? So I'm.
So you got like 3 years left.
What I said is
You
bullish,
can pull this off in the next
not
2 years.
bearish.
You can run the N=2 experiment.
Absolutely, yeah.
Claudia Sam?
Claudia Some Consulting. So the question I had is, we've had unexpectedly fast and large rate increases this year, and that has pushed up the dollar relative to basically any currency in the world. We've seen likely more financial market instabilities. So the Federal Reserve's dual mandate is for the United States, and yet are you worried that a severe global recession or financial market turmoil would come back to make it harder for
Gap has been filled.
the U.S. dual mandate?
So we do, of course, look at global developments. We have a domestic mandate, of course, as every central bank
The
does.
safest bet is XLE.
In this world, global financial markets and the global economy really matter for us. So we monitor all that very carefully. We really think, and my colleagues and I really think, that the best thing we can do for ourselves and for the global economy is to get inflation under control as quickly as possible. We don't think the world's going to be a better place if we take our time and inflation becomes entrenched and then we have to go in later. The evidence is that the employment costs of bringing inflation down only rise with delay. So at the same time, we don't want to do any more than we have to do, but we feel like as a risk management matter, we needed to do what we did and feel like we're now in a place, again, as I said, where we can slow down and try to reach that ultimate level.
We're gonna go higher,
But how much do you worry about?
403, something like that.
Claudia's question implies is, we do something with rates, other people are forced to do things with rates, that ends up spilling back to us.
Yeah,
and makes
gold
it harder for you to do it.
1763 is like a sample gold.
Consideration. We absolutely believe
Next
that we
down
take
above
that into
1763, we have
consideration. The models take that into
1776.
consideration. Of course, they're not perfect. No one would say we do it perfectly, but we have a very large global model that we use for the global economy, and it absolutely takes into account what's happening with the real economy and monetary tightening and currency and all those things. It won't be perfect, but we do that, and we also sort of understand generally that you can. There's a lot of research and things. People are talking about this a lot.
40357.
The whole is bigger than the sum of the parts when it comes to tightening. Maybe
Look at that.
It isn't, but we're aware of the risk of that. But again,
Man, if I would have held my call, would have been the crazy.
Raised, 375 basis points. Markets are working. I think we're now in a position where we're in a place where we really can get inflation under control, and we haven't. Unemployment's at 3.7%, so we haven't done. I don't regret getting to where we are, and I think
One question you need to ask everybody's got gold.
Got gold, yeah. Okay, so you see all the bears sitting at the bottom right here, 1, 2, 3 days, and market took it off. All the bears, they're gonna get crushed. And now market gonna hold up here. So if anybody think gonna buy the put, be careful, because market gonna hold and wash out everybody's premium. That's the game. Remember, yesterday video has both bull and bear scenario. I post in-depth analysis that how they played the same thing they did here, and they could do same thing here too, because everybody was bearish and they created this. Right? This is the game. You have to understand. That's why don't hold anything overnight. I just participate, take the money, and run.
Productive over time. Could that be a tailwind to productivity growth?
Okay, I wrote those down really fast. Now is the problem with reading my handwriting. So you asked about.
Well, the labor market is tight, but wages are not rising.
So this week, you got to be careful. Don't be bearish this week. Next week, you could be anything, but this week, they're going to burn out all the bears holding hopes and theta decay. Theta decay, because they want you to hold the hope that for overnight.
Not going up for most people, but to me, that's true. But
Gold gaining light in the sand now.
I think the issue really is that it's one of salience, really. So at what point do people start saying, I need higher wages because, my real wages are going down. You're giving me these 6% wage increases, but inflation is 7.7%. I need more of that. So we don't really know when that point is. But when you get to that point, you're in serious trouble. And we don't think we're at that point, but it can't be that we can go on for 5 years at very high levels of inflation. And it doesn't.
See that? The market trying to go down, immediately they take it up. They don't want to go down.
That's a serious concern.
Holding very well. Not a single red candle wants to come.
Yes, no, I think we're seeing that. You're seeing the service industries. You're going to see. This labor shortage that we have, as I mentioned, it doesn't look like it's going away anytime soon, and that's absolutely, I think, certain to lead to a lot of investment.
Josh, you know the games. Dude, I already said yesterday about the game. I played all the games, and I told you, this is the game they play. Many people wash out. They lose a lot of money because they don't know what to do.
To provide the services that the public wants to buy.
Thanks, Mike Farrell at JP Morgan. So you spoke about going somewhat restrictive and then staying there for a long time. Why would you prefer that over a shock and awe approach that goes very restrictive but for a shorter period of time? And I ask that because there's some evidence that sacrifice ratios are lower in a more aggressive regime like that.
I think we've been pretty aggressive, I would say. No, I don't. I don't agree. I mean, we wouldn't, to just raise rates and try to crash the economy and then clean up afterward. I wouldn't take that approach at all. I think we're in a position where the right thing to do is to move really quickly as we have, and now slow down and get to that place where we think we need to be. And by the way, there's high uncertainty around that. We have a broad set of thoughts about where that destination might be, but we could be wrong. It can be higher than that, could even be lower than that. We'll have to see. But I think that's the right approach, and that's also the approach that it would allow us not to throw away the option value of upending a lot of lives, which which we would do if we crashed the economy and raised them. We might get rid of inflation, but at very high human cost.
There's a question in the very back, a woman in front of the camera. Do you want to stand up? Thanks.
Thank you so much for seeing me in the back here. Nancy Marshall-Genzer from Marketplace. Just wondering, Chair Powell, is the Fed in danger of neglecting its maximum employment mandate? Is the maximum employment mandate taking a back seat to the stable prices or inflation mandate?
No, absolutely not. Absolutely not. The thing is this: without stable prices, we can't have maximum employment, and that's how I think about it, and I think my colleagues as well. In the sense that if you're constantly fighting off inflation and having these battles and having to raise rates, and it goes on for 5 or 10 years as it can, you're not going to have.
When I take my lunch, I'll be right back.
The situation we would love is to have another one of these very long expansions, and we've had 4 of them now in the last several decades. Really, when inflation was low after the 70s, we got out of the habit of these short inflation-driven business cycles, and we were able to reach. You saw where we were 3.5% unemployment. Those are really good for, very beneficial to our society to have these long expansions, and the benefits start to go to people at the lower end of the spectrum in the 7th or 8th year in the last cycle. So I think the two things go together. Right now, the labor market is incredibly strong. Again, before this thing, we've never had 1.7 job openings for every unemployed person. So this is a great labor market in that sense. It's too great in a way because it's going to be adding to inflation.
Time for one more. In the back, gentleman on the aisle. All right, 2 questions. 2 gentlemen on the aisle. Keep them short.
Thank you. I'm Orange Wang from South China Morning Post of Hong Kong. So I would just like to ask a question related with Chinese economy. So right now, a lot of analysts are arguing or believe that China's zero COVID policy is continuing to take a toll on the Chinese economy, but also likely to weigh on the global economy due to the size of China's market and its position in the global supply chain. So we're just wondering about what impact or how much impact do you accept that continuously slowing Chinese economy would have on the U.S. economy or the Fed's next interest rate moves? And is China's current economic situation a disinflationary factor or a inflationary factor to the U.S.? Thanks.
I guess I'd just say that to the extent China's having shutdowns in the parts of the country and the parts of the economy that are deeply connected to global supply chains, that's going to make those supply chains less efficient, less effective, and so that will have an effect on the prices of some of these goods that are manufactured or assembled in China. So it does have an implication for the U.S. It's hard to say how big that will be without knowing how persistent, how long these lockdowns take place for.
The gentleman behind you.
Thank you. Evgeny Shego with Public Citizen. I was wondering how you think about the trade-off of restrictive policy and the supply constraints you mentioned, so in particularly when it has a negative effect, say, on housing production that makes it harder to meet housing demand, or on the congressional investment through the Inflation Reduction Act in climate change mitigation and in energy policy that will make energy cheaper long-term. How do you think about that trade-off?
I don't think our restrictive policy would have much of an effect on the sort of climate mitigation investments you're talking about. In terms of housing, that there are 2 things. One, there's sort of a longer run housing shortage, but in the meantime, we had coming out of the pandemic, rates were very low. People wanted to buy houses. They wanted to get out of the cities and buy houses in the suburbs because of COVID, and so you really had a housing bubble. You had housing prices going up at very unsustainable levels and overheating and that kind of thing. So now the housing market's going to go through the other side of that and hopefully come out in a better place between supply and demand. But none of this really affects the longer run issue, which is that we've got a built up country and it's hard to get zoning, it's hard to get housing built in sufficient quantities to meet the public's demand.
So I want to thank you, Chair Powell, for being generous with your time, and thank you all for coming in. I want to appreciate everybody asked a short question, which that's the first time in my experience in 8 years in Brookings that's happened. I'd like it for all of you to stay in your seats for a minute so the chairman can leave safely. And if you have paper at the coffee cups or something, take them to the back of the room and just close them. So thank you very much.
Bearish diversion. I'm eating my lunch. In the middle of my lunch. Give me a few minutes. Many people are thinking right now to short from the top. And market maker knows that everybody thinking to short. You can imagine the strategy.
You know, when I mentioned 117 meta,
What?
I mentioned 117 meta when it was 111. Check it out, 117.
You got it. You take the money and run. Good job, man.
Uh-huh.
Divergent bearish. Lot of people wanted to load the put right now. Market maker gonna help them. they're gonna hold the price up there. So people are loading the puts right now. Still eating my lunch.
Check out GLD.
Mm-hmm.
Yeah, that's a very old linear regression line. I plotted, I've forgotten as when, but that's 167.43 GLD.
Okay, I'm back. All right, tell me who lost the money today, because market was well driven today. You can see that, right? Anybody lost money today? I want to hear from them. In this beautiful move, whatever market did, right? You see this? Let's try to analyze if anybody lost the money and why. Let's respond. Let me know. We need to fix the problem, right? We need to learn. Yeah, a mistake happens. If anybody played anything,
since the start of the week, I mean, I had my targets, but the start of the week has been really, really horrible. I just let my profits float into losses.
okay, good. But so remember, people were asking me, Josh, buy this, buy that, and I said, nope, I'm not want to trade anything. Let the Jerome Powell comes, and we will see most of the time. So I took my little small position on Neo, but that's the besides point. That is wishy-washy. But mostly, I was for look at the SPY, a lot of high heavy premium. I said, I'm not gonna trade this. Let it get cheaper when it was $2.50, right? And then guess what? Jerome Powell came, and then market pop right here, right? You see this beautiful pop, and then the game we played right here, a lot of bulls, calls, puts, right? That's what we need to wait. So market is going in directions. Just need to identify the event, see what they are doing. I draw the resistance. If they break, I'm gonna buy a call right here. Look at that. So now, do I care about, hey, from here to here they go, so I want to catch the bottom and top? No, I care about just a couple of candles. What I got, that's what I care. 35%, 40%, I'm happy. That's what we need to learn, right? But no, I'm gonna hold the hope for tomorrow. I'm gonna buy the SPY just in case. I'm gonna hold it for tomorrow, because I can buy today and hey, they're gonna go down. They're gonna go down, and then you buy the SPY put, and guess what? Look at your tomorrow expiry theta. You know how much it is? So when you buy the SPY put expiry tomorrow, yeah, or you can buy a long period of time, that is fine, but then you are holding hopes. Hope is the worst way to trade. Hope is the worst way to trade, right? There's a lot of people, they trade like that because they do not have a knowledge. They are kid. They just do not have the knowledge. So when you trade like that, what happens is, hold on, let me see. It depends on the premium you're paying on it. So for example, you bought a put, 395, right? 395 put, something like that. Let me see the price, man. I'm looking at my screens. 395. Even 398. December 1st expiry. And so right now, if you would have bought it at that time, the theta decay is almost like a, just a second. So this is $1. Your theta decay is almost 80% theta decay, right? So you don't gain anything, guys. Okay, that's the reason. You have to understand there's a theta decay is a big time on SPY. Unless you buy big time, but again, long term, long time, yeah. But then what happen is you participating into the holding games right here, and slowly they can burn it down, right? So that's the reason people lose money. Could you SPY go higher? Could SPY go higher? Oh yes, hold on, let me see. With that, nobody knows, man. But what I think is their agenda was all the bears trapped here. I announced that hey, they did same thing here, same thing they can do here, because we still did not test the 200 moving average yet. They're not gonna go right away. Weakness is there, but support is there, and that support.
Check GLD.
The bounce right here, and then your 200 moving average we didn't even test yet. Right here, which is slowly coming down, but it is 404 right here. So that's why they want to compress around this area between 100 moving average to 200 moving average, and they're gonna wash out all the bears now. Now all the bears still holding hopes. Their thing is market gonna come down, and Slowly they come down. They don't go crazy. Slowly, so all the bears, the game are in the play, they will not be profitable, all the bears. But those who made a profit, please let me know. Anybody played anything and made a profit, because profitability is important. Share with your experience what you do, how you do, so people can benefit out of it. What benefit out of it? If you lost money, then what was the reason? So next time other people can learn. When you benefit, also other people can learn, so they don't make mistakes. You follow? Because we are as a team. Our goal is not here to pump and dump, because that's who I am. I don't want anybody to be all-time bearish, and I don't want anybody to be all-time bullish like a kid. Okay? This is not the community. This is not the community. Because of your thoughts, other person lose money just because you are bearish or just because you are bullish. This is not the community. You can look for another community, please. Those who are listening, please look for another community. This is not the community. I do not allow. I used to have people who used to come here. One guy used to be super bullish, and other guy used to be super bearish. Because of that, somebody follow them. Oh, because he's bullish, look. And then because he likes the bullishness. That's why keep people following bullish. And then like that, any incidents happens, you get slaughtered, right? Yeah, 1 or 2 times you can make money, but then this kind of event, you get slaughtered. So you got to understand this. All right. Josh, mine was 403 from 68 to 170 calls. Okay, good. That was my highest call I had. Other one sold too soon. That's fine. Sold too soon, no worry, man. What you got in your pocket, that's what we care. What do I say? Which candle you got in your pocket, that's what we care. Do we care? Oh man, I missed this went up here. No, we don't care that. We care what we got in between here. Our goal is to find the momentum and find something to get, because we don't want to be participating, holding hopes. Oh, market gonna go today down because Jerome Powell is dovish or hawkish, right? And then we're gonna buy the puts, and then guess what? Look what happens. That's the reason what I said. Somebody wanted to buy. I said, nope, I would not go into that direction. If you buy early, then market goes opposite direction. What happens? You get burned. In the morning, they started weakness right here. Oh, market gonna go down. Market gonna go to 390. Guess what? Market did not go 390. Market did went to 403, right? So people like those, you need to be understand here. You don't want to do like that. You don't want to follow people like that. Otherwise, I have seen in my life, man, they blow up millions and millions. They big guys I'm talking, not small. Not a small. They were managing others' fund. They blew up. Okay? So please understand that part. It's up to you. All right? Those who made the money, congratulations. Those who lost the money, please learn the lesson. If you have anything, I'm here to share with you and rectify the problems. But look at that move, man. Beautiful move up here. Excellent time.
Yeah, GLD new highs as well.
GLD, yeah. Right now they have everything. Oh, look at the Meta, man. Meta went to 117 too.
GLD supposedly broke above the linear regression, which is very, very strong. I'm surprised.
Mm-hmm. GLD. Gold is bullish. Look at that still. Nice. Okay, you ran a straddle on it. Good. So you can exit. As long as you can exit on your put, and you can cover the loss through your call. Josh, your commentary and guidance through the day is incredibly valuable. I took a SPY 3960 call from 30 to 71. Man, you kidding me, man? You made a good killing, 120% profit. That's good.
30 to 71, seriously. Awesome.
Yeah, that's really great, man. SPX 3960 calls from $30 to 71 cents, man. That's amazing. Option flow, check option flow. Look at all this bullish flow. Apple 158 call came in. Still Apple bullish. Look at Apple call coming in right now. 217. 2 o'clock 217. Bullish, right? So people become bearish, they they take it up. Same thing, Tesla is heavily shorted, right? They take it all the way up. Now the Tesla bearish puts coming in on Tesla. Man, interesting. $250, $230 Microsoft call coming in. Still Microsoft bullish, look, going higher high. You see that? They're controlling the SPY because Microsoft has a high weightage. So people are trying to short my SPY. Okay, market is holding up there. SPY, let's check the SPY. Look at the SPY still going long right there. Call coming in. They're gonna wash out all the premium. So today is what, Wednesday, Thursday, Friday, yep, because tomorrow so by the time people hold tomorrow, they are, theta decay. So they're gonna be 70-80%, depends on your strike price, 70%, 80% your theta decay, 30-40%, right? 30-40%, 80% strike price, depends on how far your option expiry on a SPY. And that's how they can burn it out. They exactly know what to do. And I saw that a lot of puts been purchased on SPY. I said that, right? 230,000 contract was purchased on a SPY. You are a good human being, Josh. Thank you. I woke up thinking Powell going to clap the market. Yeah, I mean that's how every retailer thought. And I've been saying that retailer thinking like that. And then people lose money. Bought TQQ at 21 and sold at 22 for a quick $1,000 good. Josh, you think we will reverse coming Friday? Friday, yeah, they can do on a Friday, but they will wash out every premium and they take the money. You follow? Because their goal is to make the money from people. So if you look at the daily chart, what happened here? Look, this is where we were on last weekend, right? And then guess what? We're going down, down, down. People are loading put. And then today market open up, also put. And then guess what? Jerome Powell start speaking. Boom. Now everybody holding puts here in the bottom, and they are holding hopes. What they are holding? Hopes. When people are holding hopes, what do you think? Do you think they're gonna take the money? No. They think tomorrow gonna come back. So what they do tomorrow, if they want to come back, they can come back here. Still they will be at the loss because of theta decay. So the fish is.
Just check out SPX immediately because there is no supply and it looks like another 30 points to go from here. Ridiculous. But
I think it's a solid support.
We have 1 hour to go.
You mean to go up? Market to go up?
Yeah, another 30 points.
No.
So not 30 points, but actually 23 points.
Now it's pointless to go up and up and up. Right now, the game is over. They just want to wash out everybody's premium. That's the real game right now. They just want to stay where they are, so people lose their hope. They're just holding hopes. They want to burn out people's hope.
So, I don't think I can digest that as well, but it looks like it.
Well, that's how it is, man. This business, this is a whole business. Wall Street made the money off of you, not for you. They think they're made for you, but no. You need to identify how to make money. Otherwise, everybody retailer was bearish today. We're talking about today. Everybody was bearish. Guess what? They took it up. There is nothing to go up today, okay? There is nothing to go up. Same thing will come back, but not today. They will bring.
Yeah, I know it's lost steam. But tomorrow's the NFP now.
The event what you connect the dot is nothing to do with that. We need to talk about the macro. Macro we talk is in a big time trouble. So this is the drama they create for rake the premium. Premium is the biggest. Look, option is the biggest business right now. Big business, right? Nobody want to play stocks. Stocks are people hold, but options is like quick money. Market maker loves those. I got tweaked. Ravan, you are common, man. You got tweaked. What happened with you, man? What did you do? What a computer algo do when to touch the 200-day? Well, there are a couple of things. One is touch down, all right, and it can break. If it breaks, it's bullish. But you got a head effect. There's a couple of things applies in there. Okay, they use every event. Market maker algo use every event to fake out, break out to make money. Remember that. So you need to know what you want to do, how you want to use that event. Market got a weakness little bit. SPY has a price of control line is right there. They don't want to they want to control right there. Ravan down 80%. Yep. I had $1,000 in 397 put. I need to learn a stop loss order.
Now you got to check it out. There's still room to go. You really have to check it out.
It's a weakness. Market has a weakness. It's just washing out the premiums. There is nothing going anywhere. I'm not saying no, cannot go. Everything possible. I'm not denying anything, but I'm not going anywhere right now. I want to preserve what I made. These are the days you got to be very careful. That's why since morning, man, I was keep The moment I saw SPY and premiums are super high, man. SPY same day option expiry $2.50. I'm not gonna pay. I figured these people are trying to take the money from people's. People don't have any knowledge how to trade options. That's why I give option class. I teach every little details. Otherwise, you're gonna washed out. You need to identify the trap.
Yep, I mean, I bought some.
Mm-hmm. Yeah, I mean, I bought after Jerome Powell speaking, and then event was there, and then momentum there. That was a beautiful move. Even I played put also. I didn't. I played put also, and I draw my support here, and I said I showed you. I said, hey, if this breaks, I'm gonna probably play because I saw the sloping resistance. I played that also, and then I played the call also. I did not play anywhere call here until it breaks. This my resistance. Once we broke this one, boom, right here. I don't care from.
I tried buying it at the lows, hit my stop twice, and then I took the third. It went well.
Mm-hmm. Just people need to learn, man. That's what I say. Rather than burning money into this market, giving out market, just educate yourself. Otherwise, what happens is this market will, man, take everything. Believe me. So the way is well defined. This market is well defined to take the money from you. And I'm telling the truth. No matter how much smart you are. Soothing soul, try. What happened?
And here comes David Hunter. Here comes David Hunter. He just tweeted saying that now gold miners are to rally and silver to 27 and 50.
Wow. Somebody said I've been unlucky. Wow. You're losing money. That means you need to stop doing what you're doing. Every day is not the same day. You need to analyze it. Pull back, analyze. The best thing is to pull back to analyze. If anybody lose money, they need to pull back and analyze where the problems are, because if the early thinking that market is going to tank because of these is difficult. Events are made the money from you. Remember, all the event is a free money for market maker, and they make the money. Nope, I do not expect market coming down. I told you. People are buying puts. They think that the market is gonna come down. No way, Jose. Market. They're not gonna give your money back. They're not gonna give your money back. Look, market going high, 4,340. Just think that. Do you think market likes to give your money back? Think that way. They have no interest giving your money back.
Yeah, I feel sorry for those who are sitting on their hands.
Mm-hmm. Tons of people loaded all the calls and puts. SPY HOD. Yeah, we touched down 200 moving average right there. Look at that. We are right there, not that far. 404,
I told you that
404, 404. So another 15 cents. SPY touch. SPY touch 404. 404.
late, bro.
Yeah. So they filled up all the gaps. All the gap left, they fill it up. They fill it up. All the gap filled up, and then next week, maybe Friday, they're gonna flush. But they're not gonna flush like big. Small, small. Amazon
It's
intraday.
tough to assume the numbers actually. Is there a correlation?
1 second. Amazon is bullish right now intraday. Heading back to 95. Intraday, Amazon is bullish. Whenever the event happens, guys, they have to use the volume button. Means they have to use Amazon, Apple, all the garbage, they have to take it up. When algo kicks in, everything goes up with it. Right? Most of the stuff goes up. If they're going north, if they're going south, everything goes south, right? That's how things are. Just need to not to participate early. Remember, not to assume that market is gonna tank. And sentiment, the market sentiment is bearish, right? So don't participate into the sentiment of the market, because that's called social sentiment. They study that, right? They have all the algo, and they study social sentiment, and they can see all the calls and put been purchased since morning and since last 2 days. They exactly see, right? And they rake it up. That's the game. Jennifer class, I don't believe in stop loss. I know. So what I'm very unique person. Unique mean to say, I don't know, say I'm a best one, but my style, based on my thesis, my styles, what I do, I identify the weakness, and I identify my strength, and then I learn and found out that if I do stop loss, I would lose money. So I don't do stop loss. I do not believe in stop loss. Okay. Intraday, when I trade, because stop loss, they can break the dirty games. Let me show you if you want to see dirty games. And we can lose money. Let me see here. You can see this my screen. Right here, check this out. TradingEdge, this video is like for stop loss, right? A lot of people say, hey, I believe in stop loss, and set up the stop loss so you can don't lose the money more. But hey, there's a stop loss is well defined, so where system can break your premium. This is how the stop loss works. I made this video so you can see.
Hey, Josh, 34,350 double top Dow Jones.
Beautiful. So market was bullish, resistance right there. That was a divergent, guys. Look at that. Did you notice that? So all divergent. This is bearish divergent. That's the bearish divergent. So all the people who are holding their stop loss on bulls and bear both lose money. What happened? Something is happening. Okay, so they go extremely, like some people put 5% stop loss, 20%, 15%, right? And they go so quick. So people, both the bulls and bear both lose money in this case. Okay? You will see you will see how they lose right here. Exactly right here, those who entered or those who have a stop loss, both. So right now bull losing, and you see bear will lose too. After that also. You're gonna see now something happen. Those who are entering into it. Check that out. Now bulls are entering right here. You see the bulls? So the bear Right here lost all this, and look at that, it's going back to same spot. So look at that, see that stop loss triggered, gone. See this? So this is how they rake the premium. This is how they rake it. You follow? Rake the premium. Right. That's what. So this is the understanding right here for the in future reference why I don't believe in stop loss. This video I just wanted to show you the stop loss. This is how they can rake the premium from bulls and bears. Both lose money right here. Look at it. Bull lost, bear lost. Both right here. All right. So yeah, saw that. That's the reason. Because I try to identify the dirty games. You understood dirty game? That's what I teach. But they teach you, oh, no, you got to do stop loss. You got to set up a stop loss. When you set up a stop loss, we lose money. Because they play dirty games. Okay, 200-day moving average, touchdown market today, just now. Touchdown, 430. Santa Claus is coming to town, man. You guys are like crazy. Yeah, it depends on how you got to identify the cycle. So when you took my technical fundamental class, not the intraday technical fundamental, if you analyze mix and match, you keep that the class and understand, see how technical fundamental works. Then you don't lose. Even this happens, you will be all right. Right? Look here, market bearish, and then 4 green days right here. So if you understand the class I gave you, then you understand how not to lose money. That's why, man, is these market makers, they are champion. They can see exactly the moment you enter into the trade. Santa Claus is coming down. Yep. They see your stop loss. Absolutely, they can see your stop loss, and then they run down and run back. That's dirty game. I had to work on psychology trading. I have been working on it. Fear sets in when position size is higher. I had one of those days. You need to learn not to trade. First thing we all need to learn is not to trade. When you can control that, then is the way to believe in further. Otherwise, success will be far away from you if you do not. You need to identify weaknesses, identify the strength, understand things are and what it benefits to you, not the FOMO. And then that's the way to go. Yep, SPY touchdown 200 SMA right there. Yep, SPY 404. When lower interest rate and all those things gonna go on, and that will be there. They will create all different headline. Look, yeah. Market is still do you believe the big rug pull coming? Yeah, I do. 101%. That's how they make money. But time, you need to identify the time. There's always, they set up everything. They can do everything, but they like to benefit. Right now, their goal is to make sure everybody is bearish. So they want to make sure they take it up, and you're holding hopes, because hopes, theta decay. Theta decay is the one where they know exactly how to set up a trap. You understand? Theta decay. Just what I can share is buy contract close to strike price as possible, better for me, safe for my conservative. I could not understand your question. What what I can share is buy contract. Then can you compose the question better? I don't know. I bought January 20th puts. January 20. Oh, you have far the time. Yeah, those cycle. Yeah, as long as you have the time in your hand, you know what to do. Contract close to the strike price. They are close to the strike price is there, but then delta. You got to understand the delta also. Calculate the delta and identify the cycle when it's expiring, and then you look for your safety, right? Beautiful. Are you in any position? I am 99.999%. I'm not in position. Only my Neo, but who cares? That's the wishy-washy. But I still have Friday expiry. Neo shows me 35% loss, 38% loss right now. Right now, I'm not in any position. 100% cash except the Neo, but that's teeny mini. I'm not trading. I know it's bullish, but I don't want to go and trade anything right now. The more the north they go, the better for them to wash out everybody premium. Market gonna poke through the things. 200-day moving average. Look at that power. $405 market broke to the 200-day moving average and close. You watch today, man. That's amazing. $405.89, right? We touched down 405. SQQQ. SQQQ down big time. Look at that, 48 to 42. Mm-hmm. Still market is bullish. I think market could go and test 407 sloping resistance. Market sloping resistance. But maybe tomorrow. Market gap up and go. Dan Finn, I haven't taken the classes yet, but I usually find contract that have a delta 50 above or that's not the delta is okay. Delta is very close to the target price is 50 cents. 50 cents is okay. So super low theta, okay, that's good. So this soul, you have had a 400 calls. Wow, look at them now. Yep, you're right. Jim, 20 lost 25% in the morning and made 50% in the afternoon. So positive 25% for the day. I'm learning a lot here. Yes, sure, no problem. Josh inside in is inside in amazing. Yeah, I try my best. That's why I was not trading in the morning. I was keep telling guys, say, hey, no, I'm not gonna buy these. I trade small. I did not. I announced that I'm not gonna do anything. I just 1 or 2 trade I took, nothing much. In the morning was because too expensive. 407 today, I don't know, but they wants to go north. That's what I can see. All the people who are holding right now puts, they're buying puts right now. Many people are buying puts, and I would not. The way things look like, market is washing out everybody.
Hey, good afternoon, Josh. I hope you're having a green day.
Hey, what's up, man? How are you?
Oh, I'm excellent. Just finished with some classes. Now I finally have some time to listen in and learn a few things. Thank you, Josh.
Mm-hmm.
So we did have a double top just above the 34, 350 DT, and then using this is using point end figure.
Mm-hmm.
So I had 434 250 double top earlier, and now above 34 350 we went to touch that again as support and back above. SPX I still have maintained the target of 4061. I mentioned this before Powell spoke. Not there yet, but 4061 probably hold there. Another 7 points to go.
Mm-hmm. Interesting. Josh, I'm naming my firstborn Josh. Man, you crazy. You seriously got a boy or girl? I'm not bullish on gold, so just a temporary. Market maker job is to, what's that?
Yeah, that's that. I mean, a lot of gold. I'll tell you what. Whenever the dollar gets stronger, they love knocking down GDX and the cartels. Cartel eventually will lose the battle, but they will lose the battle eventually. But this is the time where people get into gold, and I think. As soon as gold started popping up and the Dow started popping up, I suddenly saw a lot of tweets saying that gold and silver heading now to 27. They've been saying that for the past 2 years. But I look at order flows and I tell you that I have now I have 1769, which is a very important level. So 1769, and we probably would touch that and go back lower. I have a final target of 1775.
Your sound is suppressed.
I have a target of 1775 and 1776. So it's almost the same. I'll say 1776. And that is only if we go above 1769. I picked up gold sometime back and I booked my profit. I picked up gold around 1763 and just sold it off. A heartbeat ago. So above 1769 and 1775, we have 1848, 1848. 1860 was a key level earlier before it broke down, that 1860 level. I think 1848 should be there, but I believe 1775 is a key level for now because the dollar could get stronger. Fundamentally, there's nothing to get the dollar weaker at the moment.
Got it.
Hey, Josh.
Hey, what's up?
Good. Please, can you check Period Network for me, please?
Which one?
Period Network.
What's the symbol?
PERI.
Oh, Period Network, okay. Already.
Oh, Period Network, okay.
27. Wow, looking bullish. Okay, 60 undervalue. This is good. It's nice and beautiful looking. It's heading to this area. $31, and it's nice, beautiful arch coming. Look like this is the arch building up. About a month process, but yeah, look like nice. Target is $31.
All right, thank you.
Hey Josh, I have a play going into earnings tomorrow for Ulta. I was hoping you could take a quick look.
Ulta, ULTA.
Yep, ULTA.
Man, this looks super bullish right now. What happened, man? This stock is like flying high. They're gonna bring this down.
Yeah, it's all-time highs in the last 5 years, Josh.
Yeah, man, this Ulta, oh, interesting, huh?
I'm convinced there has to be a pullback. I was just curious, especially because tomorrow after hours it's earnings. I was just wondering what you think.
I mean, the strong balance sheet, everything looking strong to me here. I'm not denying here. It's undervalued though, but it's too high. Let me see. I'm gonna see something there. Option activity. Oh wow, they jumped up the option 113%. So options are like super duper high. $15 options. Theta decay $4. So okay. So $4 means how much you get?
I was looking specifically for like 330.
Whoa. Hold on.
20th.
Let me calculate something. I'll tell you. So $8, that, and then 8, and they can probably bring this one down to 8. So for $15, stock goes up or down. People don't get money. People don't make money. $15 up or down. Bulls and bear will lose. $15. If the stock moves $15, nobody makes money tomorrow. Okay. You need more than $15 to make money, at least.
Man, that's quite the jump. Okay, that's good to know. Thank you, Josh.
How's Tesla looking? Tesla is now, remember today every garbage, everything goes up with it. So Tesla is heavily shorted, so they took it up. This is done.
Yeah, I say the same. When liquidity eases, all the boats float.
Yep. So now Tesla is 30 minutes. The magnet is here, they took it up right here, right? So Tesla could come back because I still see the magnet is down. Yeah, magnet is down 182. It could come back when, God knows whenever it come back, but I need to see right now because of the market took everything up, right? So the still magnet, if the magnet moves, then I believe, otherwise all the bulls and bears are sitting at the bottom. Okay, so Tesla today is bullish, but you got to give a little time.
Okay, Josh, check this out. Huge order flows at 34,500 Dow. That has to reach. That means we go 90 points higher again on the Dow Jones. Can you believe that?
Dow Jones, yeah, man, today is super bullish. Look at they broke through the roof. Everybody was bearish. We got a rejection today, and Dow Jones through the roof. Today everything is through the roof. So if you look at the market, 560 points, Dow up 1.6%, Nasdaq 3.7%, Nasdaq up. Can you believe it? 3.7.
Yeah, I have not picked up Nasdaq as yet. I mean, I've been beat up, and surprisingly, DAX is just not moving as much as it's supposed to be. Maybe tomorrow, which usually should move alongside it.
SPY going higher and higher. I'm in 406 call, 34 cents.
That's cool. And keep a watch on the Dow. 34,500. Don't book your profits before that. 34,500 is going to be the next.
I think what?
No, seriously. You've done that twice. So.
Look at that.
Look at that, man. Look at 34. Oh, God. Damn.
Yeah.
I should have, I should have done 10, 15, 20 lots, taken a leverage. I couldn't take a leverage.
61% profit right now. 61% in 2 minutes. Still holding.
$464, $467, 66. Come on, 500.
Nice one green candle, and I will be Okay, right
Okay,
there,
we're almost there.
70% profit.
Oh, come on, wait for some time.
Take a home run.
Yeah.
No man, book the profit. And what price is it right now? 406.29. Yeah, it's going good actually. It's going good. So okay.
479. Come
So,
on, 480.
yeah, a home run right now. 100% profit.
80, 81, 82.
Yeah, it's going good. Why would I? It's going good. 70 cents. I'm out.
Let's go. Yeah,
70 cents. I took the money. It's okay. Let it go wherever you want to go. I don't care. 105% profit in 5 minutes.
That was cool.
That was cool, right? You just need to identify. We don't care where we play. Doesn't matter where SPY goes. Doesn't matter where SPY that goes. And we care about momentum. Josh, what did you just buy? SPY. 406. I announced. 34 cents I paid. And now I'm out already. I took 105% profit.
Yeah, 485 now. 488, 89, damn.
It's gonna go to 407. My target is 407 for the market.
92,
407. So
93,
26.
94. Oh man. 97, 98. 500 halt. I know there's volume there. And for sure there's a lot of volume there. And I can see it there. I told you. 98.71.
Oh, big rejection coming in.
Yeah.
Flushing out. Mm-hmm. 15 minutes left.
Yeah, and the rejection from 34,498, just 2 points away from that 35.
Yes.
500. Got out at the right time, huh?
Yeah. Still the MACD is very bearish on 4 hours. Okay, it's a diversion. But this is today's the Jerome Powell speaks. He's 360 change. Remember, technicals and financial fundamental wipes out when they play.
Yeah, I mean, what the market is, they price it much earlier than. So you see what the market is expecting, and then you see the opposite. I was expecting 4061. I was just using some retracements. I was watching the order flows, and I saw huge order. I mean, on the downside, I saw order flows around 3,900. Obviously, those were written off, and then I saw 4061. And I made up my mind yesterday that we are heading off to 4061. Gold has picked up, so I think we're going straight to 1776, like I said. Something's cooking in the Eurozone. Look at the balance sheet. I mean, I saw somebody post some time back.
Okay. Google is HOD. Seven minutes left.
What would you call this? Short squeeze?
Look at the Microsoft pop. Look at the Microsoft pop, Tesla pop. Tesla going.
Yeah, one could just carry forward and buy the maybe next week 150 Apple call.
Mm-hmm. Possible. I'm out of Neo, 19 cents. Took a 10-cent loss. But it was not big. Took a 30% loss. Man, I wanted to. Man, they took it up.
And those guys comparing 2008 charts with 2022. Good Lord.
This Friday, all the option will be dirt cheap. Tomorrow, they're gonna hold it. They're gonna hold all this still, because a lot of people have a premium. They think they're gonna have a still time. So I think tomorrow they're gonna hold it and burn everybody, all the bears, super duper. That's the game.
Hey Josh, I have two questions for you.
Yeah, what's up, man?
Based on Powell, his speech today, do you see that as a pivot? Everyone's talking about this pivot. Do you see this as a pivot? That's number one. And number two, what's your thoughts on TLT bonds? Thanks.
TLT would be all right, right now because they want to control and they want to sell that. But right now still I would not go anything on a long TLT. Temporary, yeah, you can be, but I do not. TLT still they are vulnerable unless the inflation comes down. So TLT is not possible from my perspective. That TLT is not maybe after 2023. Still they need more time to work on TLT. And the market definitely there are what can I tell you, man? There's a lot many elephant in the room. This is just people get afraid because they have a short positions, right? Many people have short positions. That's this is all premium game, guys. All right. In the whole our market, who buys the right now? What, are we bullish? Are we bullish? No, right? Nobody is bullish. So only retailers are bearish. So to rake the premium, this is all game get played and they can rake the premium because it's just a matter of a day or two and they're gonna rake the premium and then they can bring it down. So that's how things are. Every time happen. Previously same thing they do like this. Most of the time all this event happens, they like to use the event, and that's what I've been giving heads up that hey, they can do like these where we all sit down at the bottom.
You know what I see? So same thing with the CPI.
Mm-hmm.
They bring the market down the few days before, right?
Mm-hmm.
And then the reaction is just crazy. But then if you zoom out, it's basically where it was on Friday.
Mm-hmm.
But it seems like it's a big shift, right?
Mm-hmm.
So I think that's part of the psychological game, I would say, like you said.
Absolutely, that's how things are. Only thing is the people who play advanced, they lose money because they do not know what they're going in. They don't want to play psychology. They want to play with the sentiment, and that's how the market knows. Market knows social sentiment, and that's how they do. And then market goes opposite direction, and they just connect the dot up because of this. That's why I don't participate into the market social media. I mean, I do keep eyes on it, but I have seen many Christmas. So that's why I don't participate. Today I was not even trading also until market was going higher, you follow. So I mean, when market started going higher, when the FOMC meeting started, it was great.
Perfect. Thanks, Josh.
No problem. Thank you. Market is closed. Boom, boom, boom. Market is over. I hope everybody had a good time. Okay, so a lot of messages coming in. Let me read this. Somebody sent me a message today. Okay. Please share if you think I will help anyone. Yesterday I lost 31% of my dedicated option trading portfolio. I was over trading, doubling my contract to try and make up loss, and not looking profit and holding. Booking my profit and holding 0 DTE too long. Yes, 0 DTE is not. If you're 0 DTE, you gotta get the money fast. Today I forced myself not to trade until I felt it was sure thing and took a profit along the way. In 6 trades, I recouped almost 50% of my yesterday loss. So still down a lot, but yeah, 50% recovered. I know this lesson, you say them all the time, but it's good reminder of the bad side of the undisciplined trading. Look, as long as you're realizing and typing and sending message to me and to let other people know is important, because we all need to hold each other hands and help each other, then we can grow. Otherwise, what's the difference between you and me and social media, where we follow Trump, Elon Musk, and he's gonna pump and dump and that's why we lose money. We cannot just react on somebody, just say something. because they are pumper, they are celebrities. Celebrity, man, we cannot. They are big people. So we can't. We have to follow what our instincts are, and that's how we need to trade.
That could cost you 8.
Mm-hmm. Josh, can you look at the what is it? NVX? Sure. ENVX. You know, it's $13 right here. Okay, this one is negative. Any company who is making $8,000 yearly income, that I don't go, guys. $8,000 is nothing right here. Right, you see this 8K income is nothing. The company losing big time. So what can I look into it? I would not pay even $5, $10, $5, $1. So yeah, whatever is happening, I need a financial fundamental behind. If not, whatever market bump, went up, it could, but this is temporary. Because shorted, it could go down. Eventually, it's gonna go down. This garbage, but we don't know is what the event is behind. Who is buying right now? Is market maker. If they send the order to flush all the people who are bearish, that's what they do. People who are bearish, how do you do that? You keep buying until the stock goes up and your premium goes down, right? Once the 4 o'clock rings the bell, that's it. You are now trapped. Now the fishing net comes out. The fish, they are the fisher, and you are the fish in the net. Now 4 o'clock, that's it. Can you sell your option now? Can anybody who's holding their option, can they sell? Nope. Right? People who are holding puts, can they sell right now? Nope, they cannot sell. Right? That's the game people need to identify. Anyway, so this all sound wouldn't even give you $5. What? That's crazy, Josh. Market maker will play dirty games. Well, guys, remember this. I call it dirty game, but you have to understand, Wall Street is not there to make the money for you. Okay, they are there to make the money off of you. Right? You are the customer. Right? You buying. Right? You buying from them. They are selling. Right? What are you buying? You buying melting ice cube. It's gonna become water after the time is over. You buying time. You buying the time value. That's it. You buying the time value. You're not buying stock. And they love it. They're loving it because you're liking it. You think Anyway, I'm not gonna get into that. We all need to understand all these games, man. If you can really understand, then you see. That's why you need to identify the cycles. What cycle you want to trade. That's why I tell everybody, take a class, man. Everybody take a class. You understand the cycles, see what cycle you need to get in, get out. If you choose the wrong cycle, then you could be trapped into their agenda behind. Yeah, this company could be a good shot. NVX, VX. This could be Cathy Wood stock probably. How come 8,000 here? All right, any other questions? CRM is Snowflake's earning. All right, let me see. CRM going down, Salesforce. And Snowflakes too. Let's see Snowflake. Both are going down, Snowflakes and CRM, right? But can you? The thing is that Yeah, both are down. Let me see if you're earning, and then I'll let you know. Just a second. Man, Snowflakes is going down big time. Hold on, let me tweet. Alright, so Snow earning came out. Expected with 539 million revenue. They got it 557. Okay, so that's bit revenue bit Snow. But okay, that's fine. EPS, where is EPS go? I don't know, but that man is not there. What a game they play, huh? Okay. Let me see.
Yeah, I'm looking at the contract for differences that they haven't given up either. It's like a lot to catch up. Still haven't gone right there. We're looking at.
Wow, Snow supposed to go, man. Snow EPS is 7 cents, guys. 7 cent EPS, and this stock is $142. I would not give even $50. Snow. Wow. Man. Wow, amazing, man. Going down. Snow is a good shot, man. Snow is a very great shot. And it's a golden opportunity. All these company, they're gonna go to the reality. What's up, Brendan?
Hey Josh, how you doing?
Yeah, I'm good. And you? Did you play anything?
Put my headset in.
Yeah, Snow 125 post market.
Yeah, Snow gonna go snow tubing. Okta doing good.
Yeah. No, what a good day. I was in the background listening, popping in and out, but yeah, what do you think about Snow?
Snow is garbage, man. Yeah, it's definitely. Look at this earning, man. It's horrible. This I mean, the EPS, 7 cents EPS. The company is losing money. Not losing money, but it's like the very low EPS. It's overvalue.
Hey Josh, I noticed something on TradingView. When I pop from a 1 minute to my daily, it's all messed up because of the big move. Do you know why? Do I have to turn off gap or something? My 1 minute's right, but it's weird. Look at Tesla there, man.
Oh yes, Tesla took it up. But one thing I notice about Tesla, look at this. Oh yes, now I can see price. So the volume up moved up here. Okay, so magnet, they did move the magnet up. Let me see if yeah, magnet has moved up. So because it's heavily shorted, right? Tesla is the most heavily shorted stock. So they took it up right here. Okay. Look at 5-minute chart.
Yeah, I see it. The magnet's back to like what, 190?
Yeah, so this magnet moved up, broke this resistance, and went up today. But this is just a temporary, guys. Okay, I can see that this is probably another week or two, and then everything will be back to reality. But this right now so far is bullish. So far is now, look at that trend line is right here, is intact. This still is intact. Did not break the support, intact, everything is intact. And it broke the resistance and went north. So where it is heading? 200. But not that far though. Let me clear the garbage. I have so much on my okay, so that's how the Tesla look like. Okay. How low snow can go? Let's look. This is all history. Snow support is right here. So snow heading, but slowly snow gonna go there. It's not gonna go in one shot. Market maker cannot take it like that. But eventually it's super duper overvalue. So all this super duper overvalue stock is heading in that direction. Right here. So first next support is here. And it's gonna touch. It's gonna go, snow will go into double digit. When? Time will tell. But it's heading.
Hey Josh, what about the SPY? Like, what are the upward levels? I know we're above the 200-day now on the daily. What do you think?
Well, market right now creating all the bulls, right? So, Jerome Powell spoke, and, they want to, we broke the 200-day moving average today right here market. So, the system will trigger, and it's bullish right now. So, it is bullish, and we are at the sloping resistance from all the way up here, which is 407 our target, which remember still I have the price there, 407 right there. I said we're gonna go and test the 200-day moving average, and sloping resistance is just 407. That's where we got stuck today, just now market. So what does it mean? Because they did all this, so all the puts people are buying in the money and out of the money game they're playing. They think buying in the money, You buy in the money, out of the money, you still lose money, right? It doesn't matter you buy in money or out of the money. But yeah, so the delta will play when you buy in the money, out of the money. So that's what they do. They go further out. So all the bears, they get washed out because last 3 days, all the people were sitting at the bottom. Those who holding hopes and, but people who not holding any contract, they must be the happy right now. Because this is when big event happens, they always play against the social media. That's what we need to understand. Big event, they can exactly see what social media is, and then your calls and puts during the daytime, during the yesterday, day before yesterday, they pile up and they exactly wash out every bear. All the bears get washed out, and they wash out like big time. They take it so far away that your account blown up like zero, right? That's how they do that. And then because after the 4 o'clock, that's it. After 4 o'clock, you have nothing. You cannot do anything, and then you are participating into theta decay, right? And then you'll be battling against your own cost. That's it. Depends on how far you bought.
I heard him say a couple things that were kind of key. He said something about QT, and I'd have to go rewind it, but he said well, we're really keeping an eye on that. We don't want to destroy the economy. So if we get to those levels, we would back off. So that's definitely dovish, something like that. And then he also talked about rates, and he said he doesn't want to destroy people's lives. So he's keeping an eye on the rates. So this is the first time I heard him say stuff like that. I took advantage of calls, but I got in and got out like you. Could you imagine, man, those 4,000 SPX went from 3, it went to like $70, man, $50. Those are, but yeah, I mean, I still green day for me, but man, some people did 700%, 1,000%.
Yeah.
So, but I was watching the charts, and today wasn't a chart; it was just price action.
Yeah. So, but no, but
well, I'm happy.
I don't think so. Powell, Jerome Powell knows, man. Exactly where the problem is. It's a big time problem into it, right? But we gauge the economy based on the market moves. If the market goes 500 point up, oh, economy is great. And then 1,000 point goes down. Oh man, economy is bad.
You know what this today reminded me of? Remember 2 days ago, you posted something. You said, "Oh, SPY going to 490." I go, "No, Josh, typo." Remember? Josh.
Yeah, but did you hear that when he mentioned home price inflation?
Man, we have a bigger problem also. A lot of problems are there, but eventually, yeah, it's okay, man. Let them do whatever they want to do.
Post your post, man. SPY 490.
Oh yeah. That was a typo.
Remember, Josh?
Yeah, typo.
Thank you. Remember?
Yeah, that was a typo. But
anyway, good work today, man. I've been in the background, so I'm listening every day.
Got it. Alrighty, guys, let's call it a day, and see you guys tomorrow morning, 9:30. Chill out, relax, and enjoy. All right.